What's going on, guys? It's GBP baby. Welcome back to another video. I hope everybody's doing well, and let's get straight into things. So today didn't actually go as planned, which is not the first, especially on weeks like these. Predictability and just accuracy in general does decrease a significant amount, so we need to keep that in mind. But nonetheless, we're going to continue forward and carry on looking at this week and how it's delivering. So again, we're still playing around in this implied fair value gap, which I drew our attention to a few times this week. So we traded back through here, and then if we drop down to daily, you'll see how we gapped lower and then traded very aggressively right through Wednesday's trading when we had FOMC. So you can see that there's continued volatility, a lot of aggression. One thing I want to bring our attention to is the fact that we traded down into this mitigation block right here. So if I draw out the high off this, you'll see that we made the low at this mitigation block, which is quite interesting. And then from there, we traded aggressively higher, running towards Wednesday's highs. Another thing to take note of is that we traded into 50% of this fair value gap. Don't get me wrong, I did state that I wanted to see price trade into here, but you can see we quickly made that low at the 50% level, not even trading to it. I'll just show you that more clearly now. So you see we didn't even trade to that 50% level before price started aggressively running higher. So yeah, not as planned, but at least we know we're likely going to continue higher moving into the Friday. And then obviously next week we can start fresh and look at the charts with a fresh mind and open mind in general. So where am I expecting us to run to now? Well, I am looking at these highs over here, especially this high from the 1st of March. So I'm going to get that drawn out for buy side liquidity as a target. And what I can do is I can make that like so. And it's just interesting in general. We closed on a low, gapped lower as well, and then aggressively ran higher. So again, we can see bullishness, you know, being shown in the markets, and we should look at this a lot more logically. So on the 4 hour, you'll see how price aggressively traded lower, ran out this sell side liquidity below here. These are relative equal lows, so there's going to be sell stops. We grab those sell stops, and then you can see how price has broken aggressively to the upside. So if we are to continue higher, which is what I'd now expect, and it is a bit annoying considering yesterday I wanted to see us trade lower, but you know, when we're constantly seeing interest to move higher, and you know, we're bouncing off levels such as mitigation blocks like this, eventually we're going to have to stick to one side. And by the looks of things, I'd like to think that we can continue to push into this buy side liquidity. If we are to trade higher, I am going to be looking at this down close candle here to provide us to act as a reclaimed bullish order block. Now, a reclaimed bullish order block is quite complicated. It takes time to get used to. And the reason this is this could be a reclaimed bullish order block, we have to wait until we trade into it, is because this order block caused this swing right here. So it's a breaker. We've got a high, a low, a higher high, and then price broke down. But this last down close candle is what caused this big movement up. And now that we've traded through that aggressively on the 4 hour as well, closing this gap completely, and we're expecting higher prices, and we're expecting a run to this buy side liquidity, that means when price comes back down to this bullish order block level, I'd like to think that price can turn around at it and trade higher. A good example of where a reclaimed bullish order block has been showing support is here on Bitcoin. I did make a video on this not too long ago. You guys can check that out. I made it on Sunday. That's in my videos. But I was speaking about a weekly reclaimed bullish order block that I wanted to see get traded to and price react off of. And here's an example of that. So you'll see there's a bullish order block here that caused this big swing. And when price traded down into it, we had a nice reaction off of it. So exactly the same logic. I'm just applying it here on the 4 hour on dollar. So that's why I'm watching this level now. Obviously, we have a nice fair value gap here and potentially down here. But like I said, if we're going to see higher prices, we want to see this point of accumulation, which was on the buy side, continue to be a point of accumulation. So we can actually drag out the volume of this area, pull it right through, and we can watch how price trades in this in the new day. On the 1 hour, you'll see I have my daily dividers marked out for us, and we can start to see how the week has been delivering. So I'm just going to mark out the Sunday opening, which is very significant. We'll make it red, make it a little bit thicker. And then you can see our price traded lower on Monday, running higher. And then on non-farm payroll, as we know, we traded aggressively lower. And then as we moved into the Thursday, we just ran right back into the range, taking out anyone that was short. And like I said, I do think it's likely that we're going to start targeting Wednesday's high and running into this buy side liquidity as well. Obviously, here's that sell side liquidity we grabbed right below these relative equal lows here, here, and here. We gapped down to grab those stops and traded down into that mitigation block I was talking about and broke higher. Now, another reason I believe we are going to have higher prices is because we do have a break in market structure here. I'm watching this high. So if we look at this high, and if you've watched my backtesting videos, you'll know I always mark out things like this when we see a break in market structure. But you'll see that we've broken to the upside. Prices came down, found support on top of this level, which is a breaker. Why is this a breaker? This is the last up close candle before the down move that then caused this big move. This is quite a complicated episode, guys, not going to lie. But if we drag that out, you'll see our price traded into that. Volume remained above the Sunday open, so it's showing support. And then we've seen clear expansion and displacement to the upside. So as far as I'm concerned, price should continue to show this kind of bullishness moving into the new day. So as we move into Friday, I'm going to make this orange for us. I am going to be watching again that reclaim bullish order block. It's not reclaimed yet. We have to wait for us to trade down there. But as soon as we come down there, I'd like to think that London session may offer it us. I'd like to start looking for potential longs with the expectation to run into Wednesday's high, and obviously that high I spoke about on the daily as well. One thing to take note of though is, like I said, you can see how my accuracy has been significantly weaker this week with FOMC, understandably, and that's why moving into tomorrow, if we are going to be thinking about taking trades, we do need to be extra careful and have extra risk management taken into account. But yeah, let's go down to the 15-minute. Again, you can see a nice break in market structure. We came back down. Look at that beautiful respect of that breaker, and then price traded higher, found support again at that point, at that break. This is where the change in the state of delivery happened. And like I said, we should now be hunting for some kind of buy side liquidity, and there are going to be a lot of stops residing above here. As we were falling during FOMC yesterday, I was looking at these highs and they do look very relatively equal. And that's another reason I wanted to bring our attention to it, is because that's where there's going to be stops residing. There's going to be a lot of retail and uninformed money with their stops above there that price is going to want to snatch before thinking about any kind of deeper retracement. So I'm just going to get this marked out as well, and we can use this as a target moving into the new day. But like I said, the lowest I want to see price trade ideally is going to be that bullish order block down here. You can also see there's a nice 15-minute fair value gap here as well. So like I said, this may make the low of the day, but we do still have a bit of Asia to trade through as well. So we do need to be considerate of that. But overall, I like to think we can come down, offer us buys, and then like I said, run into Wednesday's high, and potentially reach for that daily high. So that's my expectations on dollar. Very interesting week. I think next week will be good as well. Now we can head over to GBP and take a look. So I'm going to start on the weekly here on GBP. And you can see obviously we've had continued down action after what we saw on dollar. And that means now I'm looking for this level to start getting traded into. There is an implied fair value gap right here. You can see there's only up delivery. We have this up close candle with volume. So I'd like to think that we can start pushing into that in the new day. Whether we take out these lows, any of these lows below here, again, it depends on how bullish we are. But after seeing how much movement we've had this week already, I wouldn't be surprised if Friday was a little bit more quiet. Although we do have high impact news. We have the Bank of England interest rate decisions and inflation rate. So if we do bypass this fair value gap, then obviously we'll start running for these lows here and here. But if we drop down to the daily, hopefully we can get some more clear targets marked out. So again, you can see the break. We came back up. Where did we trade into? Bearish order block right here. This provided resistance, so we traded into that. Volume, again, look at the volume of the blocks. You can see our volume remained below the 50% level, pushing price lower, again causing this to become a bearish order block. And like I said, I am going to be looking to be going short on pound as we trade higher in the new day, with the expectation to then trade lower. To be honest, this fair value gap I marked out on the weekly is probably going to get traded through, so I'm going to mark out some lows that I want to get targeted instead. For example, this swing low right here for sell side liquidity. We'll make that bold. And then potentially down here, again, depending on how aggressive price wants to be. I am also taking a close look at this wick. This is now a bearish order block. So as price trades back into this range of this wick, I will again be looking for potential shorts on pound. We'll make this blue. And then once we drop down to a lower time frame, we should be able to be more specific and more precise with our expectations on where prices is likely to short to. So let's go to the 4 hour, and you'll see we have a slight breaker. We have a high, we have a low, we have a higher high, and then obviously price is now closed and delivered to the downside. So this last down close candle right here, this is where we should be thinking about shorts from, because it should provide resistance and act as a breaker. So I'm going to keep this drawn out. And then on the hourly, you'll see that I've got my daily dividers again. I'd like to think that this can make the high of the day again. Looking for shorts within that for us to then trade lower into that sell side target I just mentioned, and potentially down here. The reason I'm not sure as to where to target on pound right now is purely because there's no clear fair value gaps on a daily basis until like all the way down here, and that's unlikely to happen in one day. But I do think that lows are likely to start getting targeted. We can check the 4-hour, but there's no clear, you know, imbalances to trade to, and price is always either trading to a new high or an imbalance, and ICT stated that multiple times. But it'll be nice to see what potential shorts will be able to form. Another thing we can take note of as well is that if we look at the range of today's price action, so we've had a very big bearish day, we can actually split it into quarters. So I'll get this fair value gap Fibonacci I have preset, and if you look at the 25% level, you see that marks that levels up nicely with that breaker I was talking about. So again, price finds resistance. Well, price tends to use these levels of ranges to, you know, move to the next one. So again, this 25% level is supporting the idea that price may find resistance there. If we do say trade through it, I'm probably just going to switch my charts off completely and just wait till next week, because it would be a little bit crazy to see if we like whipped right back into the range. But I do highly doubt that. And again, why? Because we've closed now. We have a close below Tuesday's low, like a clear close, breaking market structure. And again, we've left this fair value gap up here as well. I'll show you on that. Show you that on the daily. So this order block up here, the way that we've left it, again below that 50% level and close lower, this is all hinting to me that price should seek to trade lower. Furthermore, on the 15-minute, we have a fair value gap right here. This is this complements nicely with this 15-minute fair value gap on dollar. So it'd be nice to see if we can trade down into that. Whether this happens during Asian range or London, I'm not really sure, but regardless, at London I'll be looking and expecting some kind of shorting opportunities with the expectation to get into that low I was talking about. So yeah, very interesting week, and I think tomorrow will be interesting as well. And obviously 3 a.m. New York is when I'll be in the GBP charts hunting for potential setups, which is a very typical time as well in the London session for when we witness either a reversal or a continuation. And that's something for you guys to study, but I can talk more on that in a later video. Finally, I'm going to finish on Euro USD. We can start on the weekly there as well. Again, continued downwards price action. There is a weekly fair value gap here implied that I would like to see Euro start to trade into, so we can get that marked out like so. Once we go to the daily, again, you can see how we whipped right back through the range. Honestly, days like this, like price action like this, when we see the whole range of a day, and what I mean by range, I mean like the volume, it's very difficult to predict, and very, you know, it can be offsetting, and it does make sense for them to do things like this, especially in times of times like now with FOMC and a lot going on around the world in general. So definitely don't kick yourself about it, and just keep moving forwards in general. But yeah, we have relative equal lows below here, here, and here. This is that weekly fair value gap, which is placed nicely in that bullish order block. We are likely going to obviously retrace back into this range a little bit before I'd like to start seeing lower prices on Euro. So here we have a fair value gap on Euro. Euro hasn't been quite as weak as pound, which is quite interesting. We might see more consolidation moving lower. On the 1 hour, let's take a look. Here's today's price action. And yes, I'm pretty much expecting the same thing in terms of seeing some kind of retracement higher. And then, you know, shorts into these relative equal lows below Tuesday and Wednesday. And these are very relative. So like price is very likely going to want to draw into these lows. So again, in terms of looking for trading opportunities, we want to try and be short in above the opening price of Friday with the expectation to trade lower. Let's go to the 15-minute just to get a better look. Now you'll see this bearish order block right here. Preferably price doesn't take out this bearish order block, and the reason for that is because I'd see that as a break in market structure if it does. So instead I'm looking at this fair value gap right here on the 15-minute. So on each pair now I've showed you a 15-minute fair value gap which I want to see price trade to and turn around at. It doesn't have to, but ideally it will, and that will offer us our setups for the day. So this is the 15-minute fair value gap I've got my eyes on Euro, with the expectation to short down into these relative equal lows. GBP is this fair value gap right here, and then dollar will be this fair value gap right here, but obviously we're going to have to wait and see. So that's going to be everything, guys. I hope you found this insightful. Don't forget to drop a like, drop a comment, smash subscribe, join the Discord, because I am active in there. And follow me on Instagram at itsgbpbaby. So thanks for watching, and I'll see you on Sunday. Peace.